You are listening to Golden Rule Radio, your weekly discussion of the precious metals markets and the markets closely associated with the metals. I'm Tori.
Welcome back, Tori.
Alongside that was Rob and Miles, and together we have over 75 years of experience advising on and brokering the precious metals. None of us have quite the experience that Rob does, so we're piggybacking on Rob to get to that 75. But each week, the three of us are going to make sure that we provide a technical analysis of the metals charts, but also cover the underlying fundamentals and the news that helps move and predict the markets. And today we're going to get into the gold-silver ratio, obviously the metals prices for the week, and some underlying fundamentals that are certainly building and not showing any signs of stopping or slowing down and giving the metals a chance to breathe.
Speaking of that, I'm going to interject for a second. I was talking to Drew Kroll, our numismatist, just before I walked into the studio, and he was saying, you know, Rob, it's frightening that silver is now twice the price of the gold I first bought in 1970.
I mean, that's unbelievable, because we were talking a couple weeks ago when silver first became the same price as a barrel of oil. Now it's strongly now an ounce of silver is worth more than a barrel of oil. Wow. And I don't think any of us ever thought that we would see that. But think about that. Twice the price of the first ounce of gold he bought. Well, yeah. I mean, the same with you, right? You bought gold.
No, I didn't buy until 1973.
Oh, it was
so I was paying
$100. We may get there soon.
Oh, yeah.
We may at least match it on the silver price. Miles, why don't you recap the week? I mean, are you getting tired of saying up 3%, up 8%?
Well, do you want to start with those two numbers? Because gold on the week is up 3% to 4,340. So gold continues to inch up. But yeah, let's jump up to 8. Silver's up 8% on the week. And it might have a ceiling or it might not. You know, once you break past Earth's gravitational pull, you can kind of just keep going forever till you hit Jupiter, right? So we'll see how that goes. But yeah, silver up 8% to $66.50.
Wow.
Which is a little bit past 50.
But talk about platinum.
I'm getting there, Bob.
Miles, just ignore the peanut gallery. Man, Is he excited to get to platinum?
Boy, if that wasn't the next thing on the notes. So, in fact, you know what? I'm going to skip it just for fun. Let's take a look at palladium, platinum's sister metal, up 14% to 1,690. And then, okay, Rob, here you go. Platinum, the big winner this past week, 15.5% in a single week, which is insane. 1,930. Platinum is broken back into last century. Still got a ways to go to get to the 21st century. But yeah, back into the 1900s is pretty big. And you're buying 1 ounce of platinum now for over $2,000 delivered. So welcome back to some bigger numbers. Platinum, I think you still have a ways to go. On the flip side, great week for the metals, really commodities across the board this past week. But the paper market and the S&P is something I'm going to be interested to take a look at after we finish the year. I kind of want to go into it a little bit today. But the equities market, I'm really interested to see how we finish out fourth quarter here, because the equities market are looking real soft. It's down about 2.5%. The S&P pushing down to like 6,730. Still perfectly good numbers. The S&P obviously still had a spectacular year and has been climbing strong for the last handful of years for one reason or another, primarily NVIDIA. It looks like we could see some momentum starting to translate into the downwards direction in the S&P. And we'll have to see with these new interest rate declines that we're expecting pushing into the don't call it quantitative easing, even though it is, as Powell is lowering interest rates, and we're expecting possibly even to see a change at the Fed coming next year. So the old paradigm may become the new again. We may get into competitive currency devaluations, and that could help end up pushing the S&P back upwards. But right now, from a momentum perspective, the S&P is looking very scary to me. And finally, before we get a little bit deeper, the dollar obviously also down, which was expected with the interest rate drops last week. So the dollar is continuing down. We're looking at the dollar down about 1/3%, not a massive drop, but still pretty big for the world's largest thing, down at 98.40.
Talk about chopping sideways. You know, the U.S. dollar really
It's been holding.
through the summer and the fall, and it really has. Ever since it got bearish and then found a floor, it has been chopping sideways. I mean, gold's doing that a little bit into the end of the year. I personally felt that all of the metals would somewhat chop sideways after that October decline, and that we would just sort of chop sideways into the end of the year. The white metals, totally different deal. Now, it does correspond. Hedgeye Risk Management, who we subscribe to and certainly partner with, they say that we're in a quad one, which is obviously confusing to anybody that doesn't monitor them, but that means GDP is up and inflation is actually shrinking. So you have a disinflation, you don't have deflation, but inflation is slowing and you have GDP expanding. And what's interesting about that is quad one is the favorite of the four quads as far as silver, platinum, and palladium performance. So they kind of called this a little bit, but guys, I didn't expect this. And every day I come in, I think, okay, this is the day that silver is going to take a breather. But no, and all it's done is drive the ratio. I know we'll get into the ratio a little bit more deeply here, but let's do a little bit deeper technical analysis on some of this, because the gold to silver ratio is a number one question. You guys have talked about this the last couple of weeks. It's continuing to tighten. It's now at 65-1. Coming off 104 is where it peaked in the spring.
Yeah.
And that's a very quick move, reminiscent only of COVID and the financial crisis as the other two huge swings that I've seen.
Yeah, but these are not event driven. These are more fundamental, long term. The atmosphere and the background and the underlying strength of the white metals and gold are not because of a crisis overnight. Something deeper.
Well, and the response that we're seeing out of Washington tells you that it's something deeper too, because the economic stimulus, the spending, everything that they're doing is more reminiscent of a time of crisis or war. So either a recession, depression, a war type situation. What's going on?
I think it's pre-election.
It could absolutely be pre-election. It can be buying voters. It can be staving off a recession or depression that just is barely below the surface that they're trying not to let raise its head. The rate cuts is another example of that. Like, why do we need to be cutting rates? Now, the job reports we'll get into also. Terrible job reports. But Miles, before we lose track of charts, what else do you want to do in terms of a deeper dive on any of those four metals?
So I think for me, because I do think we want to talk about the gold-silver ratio and the relationship between the two, because that thing that we totally promised you 15 years ago would happen again is actually starting to happen. So that definitely makes me happy. And we're starting to see some momentum pick up in the gold adjacent metals like silver, like platinum. It's always expected, like anything else. You can know what the future holds. You just can't really know how you're going to get there and how long it's going to take. And that's sort of the big thing with investing, and where a lot of people, most people lose on investments due to expectation of their ability to understand timing.
That's right.
Yeah, the second you stop caring about timing.
The expectation, they read an article or hear a podcast and suddenly they get their hair on fire. This is going to happen and I need to, somehow get ahead of it. And then things don't happen the way they thought. Take Y2K for an example. People were expecting a big blow up. And I'm just looking at $300 gold saying, well, regardless of whether Y2K is real or not, gold's going to do very well, because we were at 44 ounces of gold equaling the Dow Jones Industrial Average at Y2K. And I'm like, if you look at the long-term chart in relationship between the Dow Jones and the price of gold, it wasn't going to stay there. And it didn't.
Well, and today it's like at 12 to 13. And that's a good point. You guys were talking earlier today, which I found fascinating, about that mindset. Like, are you holding out for an event or are you just looking at a trend? And I don't want to put words in your mouth here, but it does make sense. Is somebody investing in gold because they think the dollar is going to zero, like it's going to have an outright collapse?
Today or tomorrow.
Or soon, or even in our lifetime. It's been going to zero in your lifetime.
Yeah.
It's been going to zero in my lifetime. I'm not saying that ultimately at some point there isn't a currency reset or shift or failure.
Yeah.
But that doesn't mean that you have to buy it for that. You may not be alive for that event. But I'll tell you what you've been rewarded in is the outlook in the death of the dollar. It is dying. Every fiat currency is dying. And I look at the Japanese yen. David brought this up Tuesday in a staff meeting. I thought, oh man, that is really eye-opening.
Yeah.
But it's the leading currency in terms of the whole experiment from a fiat currency standpoint. How weak can you manipulate a currency? Well, the Japanese yen, I mean, their debt to GDP is over 230%. Well, ours is like 125%. I remember when ours was getting ready to go over 100, and everybody's like, well, Japan's been over 150 for a long time. So it's almost like when Japan's currency dies, then we'll believe that there's a finite endpoint to a currency. But gold is up, in the last 10 years, gold's up 467% in the yen, and it's only up 312% in the US dollar. So you want to see a dying currency, keep eyes on the yen. You want to see what gold can do as a currency is dying. Doesn't have to be dead, but as it dies, that's what it does. If I'm representing you guys right, that's kind of what you were saying.
Well, and it goes back to something we've also talked about, and I just referenced in terms of gold versus the Dow Jones average. I'm going to quote Michael Oliver: a fiat currency, whether it be the dollar, euro, yen, or pound, is a laughable yardstick. And he's right. I mean, gold in comparison to a 3-bedroom, 2-bath house, or the Dow Jones Industrial Average, or silver compared to a barrel of oil. You know, these are the things that we need to start thinking about. What is it in terms of something else of value that we need? That's the yardstick we should be comparing to.
Well, it's a yardstick that every year they add a random number of inches to the end of.
It's no longer a yardstick. It's a
They
stick.
still call it a yard. It's just, and you never know how many inches actually got added to it because they change the definition of what an inch is every year.
That's a good point. And that's why I love, you're right, relative values.
Ratios.
And that's what
Relative
the gold to
values
silver
ratios.
Yeah, yes, that's what gold to silver is telling us. And so you say, okay, well, is silver's run over? Is this the top? No, we're not saying that. Like if we're recommending that you move silver to gold, okay, so we've had 3 opportunities in the last 17 years. 2008, the financial crisis, 2008, 2011. Well, if you bought silver at the end of 2008, then you still likely are due for a ratio trade, okay, out of silver into gold here. If people say, hey, should I be swapping my silver for gold?
Depends on when you bought it.
Yeah, if you bought it in late 2008, early 2009, probably, right?
Some
We
of
wouldn't
it.
do all of it.
Or go back to this past spring if you bought silver this past spring.
As recently as April and May. That's
Yeah.
right. Then it was 104. So yes, mathematically, it's indicated to move some of your silver to gold if you bought then. Likewise, if you bought during COVID, the other time it went up over 100 to 1 in the middle of 2020. If that was your entry point on your silver, then the answer is yes. A lot of the rest of you need to continue to wait. Now, the gold to silver ratio is 65 to 1, meaning it takes 65 ounces of silver to equal the price of an ounce of gold. In 2011, that got as low as 31 to 1. So we could go down, another huge chunk here. So we're not saying, sell all your silver and buy gold. It's very emotionally hard for people to part with silver when it's doing what it's doing. But you have to let math and reason dictate because it really is all about the ratio, the relative value of one to the other. Same thing with platinum and palladium. Miles, you've been very patient talking about when you would move platinum and palladium between each other.
I have talked to every single person that I've put platinum into their portfolio over the last 5 or 6 years. Every single one of them, I've talked them off the cliff over the last 6 months. I'm like, I know. Trust me, I know. We're just not there yet. Just please give me another 20%. So yeah, platinum and palladium's getting real close, but I just don't think we're there yet. I think history proves that there's a fine line between being greedy and being patient. Like you were saying, I have clients that as of right now, we have already moved some of their silver into gold, but we still have a lot of silver waiting. I had a guy I talked to just before we started recording. We have moved some of their silver into gold at around 70 to 1. We're now down at 65. He called and said, hey, should we do the rest? I'm like, we were patient with the first portion. And the reason we were patient with the first one is that allows us to be more greedy with the second one. So there really is that fine line between patience to the point of greed and the motivation behind it. But a lot of that, the way you avoid that is how you set it up to begin with. And you can't go back in time, but a lot of the time, how you built that portfolio to begin with and the goals you had going forward help you stay on target as you get towards the area and help you avoid the emotional pulls of the greed or the fear. And just, we had a game plan. It's worked for 100 years. Just keep doing it. Let's stick to the game plan. So I'm right there with you, Tori. I've got some people that have started to inch out of silver, but only inch by inch.
Yeah, that's the reasonable way to do it. And then you also temper emotions. But I'll tell you this too, if the plan was to ratio trade going into it, if we set up the account dynamically on the front end, not in a dead end situation, like if we had done all gold bullion, for example, that would have been technically a dead end for this whole move. But you did get silver exposure because you expected it to outperform. Stick to the plan.
Yep.
Right. Don't get wrapped into the emotion of the moment as if it, well, yeah, but now it could do that. I had a client that I begged to sell his silver and swap into gold at 32 to 1. He said, no, it's going to 30. And that was back in 2011. And it went to 31 and he wouldn't do it. And he never did do it. It's done nothing but go up, to 100 twice since. And I don't say that to make him feel badly. I'm just saying he got pulled into the emotions. Likewise, in the spring, I had a sizable client that I said, look, the ratio is 104. You need to sell some of the gold and move into silver. Nope, I'll do it at 105. Literally a point away. They never did it. It cost them 2 ratio trades, that first one and this second one, where you have the compounding ounce and potentially a third. Stick to the plan as long as you have a plan. So have a plan when you're setting up your precious metals portfolio, and we're happy to walk you through that. You can get information on this, by the way, on the compounding ounces, because what it does is you pick up free ounces along the way. Works great in IRAs, but if you go to McIlvaney.com, you'll see the compounding ounce strategy information laid out there, and that'll help. But you can call one of us, you'll get assigned to somebody, and we can walk your portfolio through it. And we can look, if you already own metals, we can look and see if you already have something that warrants a trade.
Yeah. Clients will call me like, well, some of this stuff I bought elsewhere. Okay, when did you buy it? And I'll put it in our spreadsheets, our reports, because we have the front page is everything cost basis, profit, loss, whatever, percentage gain on the first page. The second and third page are all the dates when people bought and what they bought. And that's key as we go back and look at clients' portfolios. We can highlight those dates and dive in and see if they bought in 2011 or whatever. And we can actually give them counsel as to when it's beneficial to them. Because our protocol is not for us to make more money than our clients. Our protocol is for us to make less in our fees and our clients multiply their ounces to their benefit long term.
Listening to both you guys, I just thought of something. One of my favorite words in the English language, ish. Fall in love with the word ish when it comes to investing. Do your ratio trades at like 50-ish, 45-ish, maybe 40-ish.
It's a suffix.
Buy in at 100-ish. It's a word. Leave me alone. It's a word. Like I did, this spring, April, right? I did some ratio trades at like 102-ish, 105-ish, 99-ish.
I like it.
And you know what? We're going to get those people out at 68-ish. 65-ish. Like, am I wrong?
No.
Imagine if the client you just talked about was happy to get out at 35-ish.
But here's the thing, too. Don't feel like we're talking about swinging the pendulum 100%.
No.
You can do the ish because you're talking about a fraction, maybe a third.
Yeah.
Like you just start with a portion of your silver. Take the win.
Yeah.
Right? It's sitting at the blackjack table and you're up. And you know what? You're going to take your original chips, you're going to put them in your pocket, and you're going to keep playing at the table.
Yeah.
If you eat slowly, you
and
keep
you're going to
eating.
continue to stack your chips. Keep stacking your chips, but you'll always have something in the wings in case we go to 30, or as George says, we're going to go to
20-ish.
16-ish. Yeah, that's right.
Maybe.
We'll see what happens.
Or not. I don't
or
think
not.
we'll ever get below 40 ever again in my lifetime, personally.
Well,
But
that
if we
begs
do,
the question,
great.
where does this stop? Because the ratio is one thing, but the price of silver is another. Gold has been very bullish. I mean, just steady Eddie right where it is for all the right reasons, based on economic news coming in, based on debt and deficit spending, based on fiscal policy and monetary policy.
Well, and referencing Michael Oliver again over from Goldfix, they were quoting him. He's looking at the three moves in gold, going back to, early 70s to 1980, early 2000 to 2011, and starting this third leg back in 2016 to now. He's saying the first two moves in gold were eightfold, where it went up 8 times.
Mm-hmm.
We're
at about threefold right
yeah,
now.
I mean, I said earlier 312% in 10 years, and that fits his time frame. So
so we got a lot higher to go on gold, guys.
Which is the conservative,
which is
again.
fourfold.
Again, that's
300% is fourfold. Yeah.
Yeah.
Yeah, because we bought them at a little over 1,000, right? 1,100 in 2015, and we're at 4,400. Yeah, so fourfold. So we're halfway there if we're following a similar pattern. And that's making the assumption that we're in the same type of market cycle we've been in for the last 50 years. And there's a lot of people, Rob, arguing that, I hate saying it, we talked about this earlier today, so I cannot believe I'm the person in this room about to say it. There's always the chance that this time is different. I don't think it is, but there's a lot of people that do. And there is a chance this time is different. So eightfold might not be the end, but we're already halfway there if it is.
I'm not even calling it the end. That's just the beginning of the end.
Well, the end of those cycles that Oliver's talking about.
Yes.
The end
way of putting it.
The end-ish.
End. Thank you.
You're welcome.
The more time you spend with me, the smarter you get.
I'm feeling it. All right. So underlying fundamentals as we wrap up here, because gold really tells the story. The white metals are catching up. Fundamentals for the white metals are continued inflation, obviously supply shortages, which you guys have covered. And that's going to continue to be the case. There's this scramble for physical silver behind the scenes in the paper markets, ETFs and institutions and central banks.
But it's the big kids.
But it's the big kids, because we're not seeing that on the retail side. We're not having junk silver premium or product pinches. We're not seeing Silver Eagle premiums high.
Cheaper than 1,000-ounce bar. You can buy old silver dollars, 100-year-old silver dollars cheaper per ounce than 100-ounce bars. This is ridiculous.
So that just tells you that this market is not where the pinch is. It's the big players. But as far as gold's doing, I mean, again, there are about 14 different fundamentals that move the gold price, and silver is playing catch up. But I really want to know why all the stimulus measures that are going on. It's not just in the U.S., it's around the world. Yeah, I mean, we've had over 300 rate cuts around the world. Japan, their stimulus package, China's stimulus package. We're not in a crisis, but maybe for the first time, they're trying to get ahead of one instead of react to one and try to stave it off. So watch the money flow. Our own Federal Reserve just quantitatively eased $40 billion as if it was nothing, started to add to their balance sheet. That's after this emergency banking meeting with Trump a few weeks ago and the emergency banking meeting with the biggest banks over that weekend about the repo markets. So something's going on there. And then you've obviously got the debt and deficit issue, over 38 trillion. And now Washington's stuck on how many trillions they spend on healthcare, but they're going to spend trillions on healthcare, subsidies or otherwise. There will be an agreement that is very, very spendy. None of that is actually going to change. But I'll tell you where we're seeing cracks is in the labor market. Full-time workers plunged by 983,000 in the 2 months since September. So we lost almost 1 million full-time jobs in those 2 months. And the total number of jobs in the U.S. did increase by 0.6% over the past year, but that's the slowest growth rate since 2021 during COVID. So something's going on that's really slowing the labor markets. That does allow the Fed some leeway in stimulating from the standpoint of rate cuts. But we're seeing a problem. That type of weakness in the labor market has preceded a recession and a spike in the unemployment rate 100% of the time. So I do think we're on the verge of something. These $2,000 tariff rebate stimulus that they're talking about next year is going to help with that. There's no other reason to give it. But look at cars. By the end of 2025, there will be more than 3 million cars repossessed. 3 million cars. It was 1.7 in 2009 during the financial crisis. So almost twice as many cars being repossessed. People have a credit and a debt issue and an income issue, and it's getting exposed. And on top of that, we now have this boiling over of geopolitical tensions, namely in Venezuela, and we're now surrounding them. Trump said this armada that he has assembled is only going to get bigger until such time as they return to the U.S. all of the oil, land, and other assets that they previously stole from us. Guys, that's like saber rattling at the highest level when you've got an armada down there. Yeah. So keep eyes on that. That's a good underlying fundamental for gold. White metals are playing the inflation game, white hot, and the sky's the limit, and keep an eye on the ratio.
Well, that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, we encourage you to head on over to our website. That's mcelvaney.com/radio, where you can catch a show each week, as well as any other information about your precious metals portfolio. Better yet, why not give one of us a call here at McElvaney Precious Metals and discuss your personal portfolio? You can reach us at 1-800-525-9556. Thanks for listening. Have a great week.